So, as y'all know, I am down about, all time, I'm down 32% on my portfolio, so obviously I'm running a little dry. I haven't put any money into the market recently because, I'm just going to wait it out, see what Apple does, see what Alibaba does, see what Google does, see if it all drops even more, because, the market crash, it's going to start crashing. Like, once the S&P 500 starts going down, it's going to start crashing. Right now, it's just all these speculative stocks that are crashing, but it's still a market crash, okay? Because the whole market's going down. It might not be a big, insane crash, but it's still a little crash. It's a correction. And there's no market manipulation going on right now, I don't think, because, all it is because the Fed was like, oh, we're going to increase interest rates. And that freaked everyone out, and people started selling, which caused other people to start selling, which caused even more people to start selling. And it caused even more people to start selling, because, we don't want to lose all our money. But, when you sell at a loss, you lose money, but if that person bought in under what they sold it at, before the stock shot all the way up, they're not losing money. But eventually, it's going to be a good time to buy in. Now, do we know when it'd be a good time to buy in? No, we do not know that. Like, subscribe if you enjoy this video, please. I am not sponsored, I'm a small channel, and I would really appreciate it if I got some more subscribers. Okay, so you might want to avoid bank stocks, okay, because interest rates. So people are saying, oh, the banks, they're going to do good because whenever they increase interest rates, they're going to get more money. But the problem with that logic is that whenever you increase interest rates, less people are going to take out loans, causing the banks to lose money instead of actually make money. And it's going to cause the bank stocks to go down because they're going to be losing money. Higher interest rates, less customers. AT&T is a value stock. Now, this stock all year has stayed around $30 to $20, right? So when they decided, let's just cut dividends, everybody sold out, right? When was that, like a year ago? They decided to cut dividends. But you're still getting dividends. You're still getting a nice one, because I just got one for February 1st, 2022. This is 2 shares worth. So every quarter, I think it is, you get $1 or 50 cents per share. I think AT&T is a pretty good dividend stock. I think it's like one of the #1 dividend stocks, and I might just keep loading up on it because AT&T was a pretty well established company, So it's pretty much like a $20 to $30 stock for its whole lifetime. So it's been around the same price its whole life. So it's a value stock. It's a good play. It's a good company to hedge your money with. And eventually it could go up, and then it's going to go down, and then it's going to go up, and it's probably going to stay around the $20 to $30 range for its life. And you'll get dividends, and then you can sell at the top. Maybe it'll fall back down. You buy back in, get more dividends, or you can just keep investing in AT&T and make it a dividend company. Now, if they were to slash all of them, that would cause a panic sell. If they slashed all dividends. So if you look here, they have a good revenue, $39 billion. They have a net income, they're positive, they make money. They have $5.92 billion, about $6 billion in 1 quarter. Net profit margin is about 14.82%. They're a pretty good company. They make money. Oh wait, no. December 2020, this is like a bad year for everyone. They lost $13 billion. But you know what? They made up for it. I think that's yeah. So, AT&T, a good company. Let's see something here. Gold. Bitcoin's going to 0. So these gold stocks, gold has been going down. Was going down. But now it's going back up. Because gold is a commodity. Gold is a hedge against inflation. All these people saying, oh, Bitcoin is the next gold, you mine Bitcoin. No, you're just like wasting computer power. And there's no value to it. There's no intrinsic value to Bitcoin. It's not a company. It doesn't have anything backing it, like gold. Gold, they say, oh, what is gold? There's nothing that backs gold. Gold backs itself. It is its own intrinsic value. Like, It's a material, it's a metal, it's a rare metal, and this metal cannot be created nor destroyed. Like, I don't think you can destroy it. How do you destroy it? Like, the only way to get rid of it is to throw it into space, you know? So, no matter what happens, gold is going to be around forever. It's used in a lot of things. People like their jewelry, because gold has value, which makes it appealing to people. People just want to have gold, you know? It's used in electronics, it's used in everything. Light switches, plugs, computers, everything. Gold is used for a lot of things. Also, silver is used for a lot of stuff. So gold and silver is a good investment. So let's talk about how people are saying, hey, it's okay that Bitcoin is down because everything else is down. Well, why would I want to put my money into Bitcoin if it's not going to protect me when everything else is down? Because they say it's an asset, it's a hedge against inflation, but Bitcoin is dropping with all the speculative stocks. So why would I want to put my money into Bitcoin if I'm going to lose my money in Bitcoin along with the speculative plays that I put my money into? So not only am I losing money in these spec stocks, I'm also losing money in Bitcoin. And I don't think that people want to lose money twice as much. There's really no reason for Bitcoin in the first place. So what happened was that the Fed, they pricked the bubble. It's just been waiting to pop. Everybody's been saying that we're in a bubble and that it's going to pop, and nobody believed them, and everybody started buying all these speculative stocks. I'm so sorry, guys. I'm like always tired. Right, so Netflix was like the first streaming company, and what happened was they became such a big company and the stock price shot up because they had no competitors. So that they're really doing really good, okay? And so the stock price shoots up and everybody's like, oh, Netflix. And what happens is all these other competitors come out. So people start taking money from Netflix, putting it into these other competitors' stocks, and then the stock price drops. And these competitors, they eat away at your market shares. So whenever you had the dominance in the market, the competitors came in and then they went public, like Roku and other things. So yeah, they have Disney Plus, Netflix, Roku, Fubo, Stream. And so I would say that Netflix still has a pretty good monopoly in the stock market for streaming. Oh yeah, so the problem is, so Netflix increases their prices, they're milking their subscribers, people leave because they raise their prices, so subscribers cancel their subscriptions because they don't want to pay the increased prices, which causes them to lose money and get less subscribers. That is like not what you want to do. I don't understand why companies are doing this to people, because people are going to be like, oh well, I better just buy the cheaper one instead of paying for the 5 accounts you can have on it. I'm only going to pay for 2 accounts, you know? So people are going to lower their subscription premium, or people are going to be like, you know what, screw Netflix, I quit. I'm not going to buy this anymore because they're screwing us over because they're greedy corporation. I wouldn't be buying ARK right now because ARK has a bunch of overvalued, unprofitable stocks. ARK sucks. And this stock's going to continue to drop, okay? So, you know, it might go back to like $30, $35 before it like shot up, and like everybody's like, oh my god, ARK Innovation, they're like one of the best ETFs around, but really they just got lucky and hyped up all these stocks and they shot up their momentum, and now they are tumbling to the ground, all of them, like unprofitable companies. Like nobody cares about Teladoc anymore. Like the pandemic's over. These are all pandemic stocks. These are all stay-at-home stocks. Tech stocks got hit hard. Where to find bargains? So the bargains are the good companies that are profitable. Like Apple. If Apple drops more, I'm definitely going to buy another share. And ETFs, they are all very good companies to buy into on the drop. That's what I'm going to be doing. This is not financial advice. Please like, subscribe, whatever. This is Jake Unfiltered, by the way. Anyways, have a good night. Like, subscribe, whatevs. Have a good day.